Hello everyone, and welcome back to our daily gold market update channel. The current time is 9 p.m., January 27, 2026, U.S. time. In today's video, we will update global gold prices and the U.S. gold market. All data in this video is compiled from official and reliable U.S. sources, including the international spot market and the COMEX New York exchange. First, let's take a look at the global spot gold price. At 9 p.m. U.S. time, spot gold is trading at extremely high levels. Prices are commonly recorded in the range of $5,080 to $5,095 US per ounce. This is a very sensitive price zone for the global gold market. Gold is trading very close to historical highs. During today's session, global gold prices remained above the $5,000 level. This reflects strong and persistent safe haven demand. Investors around the world continue to prioritize holding gold. Economic uncertainty and geopolitical risks continue to support prices. The U.S. dollar showed slight weakness during the U.S. session. This provided additional support for precious metals. Real U.S. interest rates remain low relative to market risks. This creates a favorable environment for gold to stay elevated. Gold is not only a safe haven asset, but also a risk hedging tool. Large funds have not shown signs of aggressive liquidation. Next, let's take a look at the U.S. gold market. Gold futures prices on the COMEX New York exchange remain highly volatile. During the January 27, 2026 session, futures traded between $5,050 and $5,110 per ounce. This represents a wide intraday trading range. The U.S. market saw short-term profit-taking activity. However, buying interest quickly emerged at lower levels. Whenever prices pulled back, capital flowed back in rapidly. This indicates that market sentiment still favors the upside. U.S. investors have not abandoned gold. Many financial institutions continue to hold long positions. During the earlier Asian and European sessions, gold prices surged strongly. At certain moments, prices approached the $5,110 level. This marked a new historical high for the gold market. Prices later pulled back slightly as the U.S. session began. Profit-taking emerged after the recent sharp rally. However, the correction remained limited. Prices quickly stabilized again above the $5,080 level. This shows that selling pressure is not dominant. The primary market trend remains sideways at elevated levels. A constant tug-of-war between buyers and sellers continues. One major factor influencing gold is U.S. monetary policy. Markets are waiting for further signals from the Federal Reserve. The Fed continues to maintain a cautious stance. There are no clear signs of aggressive tightening at this time. This helps gold avoid sharp downside pressure. U.S. Treasury yields did not rise significantly during the session. When yields fail to surge, gold remains attractive. Investors continue to compare risks across asset classes. In times of uncertainty, gold remains a preferred choice. Defensive sentiment continues to dominate the market. Physical gold demand in the international market remains stable. Central banks continue to closely monitor price movements. Long-term gold accumulation remains in place. This provides fundamental support for prices. In the U.S. market, trading volumes remain relatively high. This reflects strong investor interest. Derivatives and futures contracts remain very active. High volatility also means higher risk. Short-term traders must be especially cautious. Intraday price swings can be significant. In the short term, the $5,050 level is acting as support. A break below this level could increase corrective pressure. On the upside, the $5,110 level remains strong resistance. This is a key psychological threshold for the market. A breakout above this level would require strong catalysts. The market is currently consolidating at elevated prices. This often signals a period of strong volatility ahead. The next move will largely depend on U.S. economic data, especially inflation and employment reports. Investors are waiting for clearer signals. In the current environment, gold continues to act as a safe haven asset. Capital outflows from gold have not been observed. Most pullbacks appear to be technical in nature. There are no clear signs of a trend reversal. This allows gold to maintain a high price base. However, the risk of sudden volatility always exists. The gold market is currently highly sensitive to news. A single major headline can trigger sharp price moves. Investors must manage risk carefully. Excessive leverage should be avoided. For long-term investors, gold remains an asset worth monitoring. Current prices reflect a wide range of global risks. As long as uncertainty persists, gold retains its role. However, chasing prices at elevated levels carries risk. Proper capital allocation is extremely important. Investors should not allocate their entire portfolio to gold. Diversification helps reduce overall risk. U.S. investors are becoming increasingly cautious. Defensive strategies are being prioritized. This reflects the broader market sentiment. Returning to today's session on January 27, 2026, gold prices generally moved sideways during the U.S. session. Volatility remained high, but direction was unclear. The market is waiting for new information. Selling pressure was not strong enough to drive prices lower. Buying pressure was also insufficient to create a new breakout. This represents a temporary balance. That balance could be broken at any time. Investors should closely monitor market developments, especially key technical levels. In the short term, the trend remains consolidation at high levels. This suggests the market is not ready for a sharp decline. Supporting factors remain in place. However, upside potential is more limited than before. The market needs a new catalyst. Statements from the Federal Reserve could be decisive. Geopolitical developments also remain extremely important. Any escalation in global tensions could push gold higher. Conversely, easing risks could pressure prices. This is something investors must keep in mind. At 9 PM U.S. time, market sentiment remains cautious. Trading volume shows no major spikes. Large orders are primarily defensive in nature. This highlights investor hesitation. Gold is being held, but not aggressively chased. A wait-and-see attitude dominates. The market is at a critical juncture. A strong breakout or sharp correction may be approaching. Capital management is crucial at this stage. Emotional trading should be avoided. To summarize, global gold prices on January 27, 2026 remain extremely high. Spot gold is holding in the $5,080 to $5,095 range per ounce. U.S. gold futures are trading between $5,050 and $5,110 per ounce. The U.S. market is volatile but lacks a clear direction. Supportive factors for gold remain present. However, short-term correction risks cannot be ignored. Investors should closely monitor U.S. economic data, especially information related to inflation and interest rates. These will be key drivers of the next trend. Gold is standing at an important crossroads. In the current environment, caution is essential. Investors should avoid being overly bullish or overly bearish. The gold market is always full of surprises. Large price swings can happen very quickly. Preparing for multiple scenarios is necessary. Investors should maintain a clear strategy. Avoid trading based on rumors. Stick to official and reliable data. This is the best way to reduce risk. The market always rewards patience. Long-term investors should focus on the bigger picture. Do not let short-term volatility shake your strategy. Short-term traders must prioritize discipline. Always set clear stop-loss levels. Never allow losses to exceed your risk tolerance. The gold market is not suitable for impulsive decisions. Staying level-headed is critical. Every trade should be carefully considered. Let the market confirm direction before acting. Avoid trying to predict exact tops or bottoms. Today's video is for market information purposes only. It is not investment advice. All investments carry risk. You are responsible for your own decisions. Consider consulting a financial professional if needed. The gold market is constantly evolving. Staying informed is extremely important. We will continue to closely monitor market developments and bring you updates in upcoming videos. Don't forget to subscribe so you don't miss future updates. If you found this video helpful, please like and support the channel. Share this video with others who follow the gold market. And subscribe for daily gold price updates. Your feedback is very important to us. Please leave your thoughts in the comments below. What is your outlook on gold prices from here? Do you think gold will continue higher or pull back? We look forward to hearing your opinion. Thank you for watching until the end. Wishing you a successful trading evening. The gold market continues to write its story. Each trading session is a new chapter, and we will follow every development together. Always maintain investment discipline. Never let emotions control your decisions. The market is always right. Our job is to adapt. Stay calm in the face of volatility and work toward your financial goals. Goodbye, and see you in the next video. This concludes our gold price update for January 27, 2026. Data was recorded at 9 p.m. U.S. time. Global and U.S. gold prices remain near historic highs. The market is awaiting new signals. Short-term direction remains uncertain. Risk and opportunity coexist. Capital management remains the top priority. Always rely on official and trusted information. That is the key to long-term survival in the market. Once again, thank you for watching. Wishing you a safe trading day and an effective investment strategy. Don't forget to follow the channel daily. We will continue to accompany you on the journey of tracking global gold prices. Goodbye and see you again. See you in the next update. Wishing you success. Thank you and goodbye. Goodbye everyone.